digital havens, or volatile assets. Crypto markets brace for impact following Venezuela crisis. The geopolitical landscape was set ablaze this Saturday, January 3rd, 2026, following the dramatic announcement by U.S. President Donald Trump that a large-scale strike in Caracas had resulted in the capture of Nicolas Maduro Point One, while traditional stock markets remained closed for the weekend. The 24/7 cryptocurrency markets became the immediate theater for investor sentiment, exhibiting a complex mix of stability and animal spirits. The Maduro Capture and the digital reaction. In the hours following the news, Bitcoin, BTC Dollar, and other major digital assets became the primary gauge of global risk appetite. Despite the magnitude of the military operation, which saw Maduro and his wife, Cilia Flores, flown out of Venezuela, crypto markets showed surprising resilience. Point 2. Bitcoin stability. Early trading on Saturday showed Bitcoin holding steady near $87,000, defying expectations of a major panic sell or safe haven pump. 3. The animal spirits. Analysts in the City of London have noted that while the immediate reaction was calm, the Monday open for traditional markets is expected to fuel significant volatility in crypto as it increasingly tracks traditional risk assets. Oil and crypto connection. With Venezuela possessing the world's largest oil reserves, the prospect of a pro-Western regime change is expected to lower global oil prices. This, in turn, may reduce inflationary pressures, potentially providing a bullish backdrop for Bitcoin in the coming weeks. Why Venezuela matters for crypto. Venezuela has long been a global outlier in the crypto world. Faced with hyperinflation reaching 270% in late 2025 and a collapsing bolivar, the nation had already become a leader in digital asset adoption. Point 4. The lifeline. By the end of 2025, an estimated 10% of all grocery transactions in Venezuela were conducted in cryptocurrency. Point 5. Stablecoin dominance. The use of Tether, $USD dollar, has skyrocketed as a means to circumvent U.S. sanctions and preserve savings. Mining ban fallout. Just weeks before the strike, the Maduro government had intensified a crackdown on Bitcoin mining to save the failing power grid, a policy many expect a transitional government to reverse. Point 6. Market outlook. What to watch on Monday. As we move toward the first full trading week of 2026, crypto investors are watching 3 key transmission channels. Trigger potential crypto impact. Oil price drop bullish. Lower inflation may lead to dovish central bank policies. Regional instability volatile. Uncertainty in South America could trigger a move toward digital gold. US dollar strength bearish. If the USD surges on the news, BTC Dollar may face downward pressure. The events are a reminder that geopolitical tensions continue to dominate the headlines and drive the markets. Traders are assessing the broader implications while remaining unfazed by immediate reactions. 7. Market analyst, Saltmarsh Economics. Relevant resources for live tracking. CoinMarketCap for real-time, 24-hour volume and price action. Met Police News, UK context while focused on London. The Met Cybercrime Unit often provides guidance on digital asset security during global volatility. MarketWatch Geopolitical Dashboard for the intersection of the Venezuela crisis and global energy markets. While the retail market is still processing the geopolitical shock, the on-chain data reveals that large-scale holders, whales, were already positioning themselves in the days leading up to the January 3rd strikes. Point 1. Here is the breakdown of the whale movements and the technical data currently driving the market. 1. The pre-strike accumulation. Contrary to the panic-selling narrative, Bitcoin whales have been in a heavy accumulation phase throughout the first 48 hours of 2026. New whale realized cap. On-chain data shows a sharp spike in the realized cap of newly formed whale wallets. Point 2. This suggests that institutional-grade buyers are absorbing the supply from smaller retail traders who are selling out of fear. The $88,000 support. Whales have been aggressively defending the $88,000 price level. Point 3. Analysts note that large buy walls have appeared on major exchanges, Binance, Coinbase, at this specific price point, preventing a deeper flash crash following the Venezuela news. 2. Large-scale transfers, whale alerts. Several significant off-exchange transfers were recorded as the news from Caracas broke. The 5,000 BTC move. At approximately 2:15 a.m. Greenwich Mean Time, minutes after the first explosions were heard in Caracas, a dormant wallet moved 5,000 BTC, approximate $435 million, from an unknown wallet to a cold storage solution. This is typically viewed as a HODL signal, indicating the holder does not intend to sell despite the volatility. Stablecoin inflows. There's been a $1.2 billion surge in Tether, $USD to dollar, inflows to exchanges. This suggests dry powder is being moved onto platforms to buy any potential dips if the Monday market open turns bearish. 3. Altcoin smart money rotation. While Bitcoin remains the primary focus, smart money wallets, tracked by Nansen, have been rotating into specific utility altcoins that act as hedges against regional instability. Chainlink, $LNK whale holdings increased by 58% in the last 30 days. Whales are betting on $LNK as the essential infrastructure for cross-border digital settlements if Venezuela's traditional banking remains frozen. Lido DAO, $LDO large-scale buyers, including high-profile figures like Arthur Hayes, have accumulated over 4 million LDO, $2.3 million, this week, targeting the 2026 institutional era of Ethereum. Staking.